$1.4 trillion.
Looking right now, of course, according to our SINS function, one of the worst days that we've had since about March 7th here. That time it was about a 2.95% drop here. So really, Shelly, trying to put some of this into context here as we head deeper into red in the last few moments. And I think one thing that you and I have been talking a lot about is the yield story that was big, yield higher. That is erasing sort of on a flight to safety, risk off kind of day.
Truly, and the flattening of the yield curve once again here. We were so excited about the steepening early in the week, and that tailwind is gone.
And I think it's interesting. I mean, we talk about the S&P that, of course, was back in February, late February, kind of went into correction. And it stayed there for a little bit. Then it kind of climbed out. At one point in the middle of March, it actually looked like it had the potential to actually go back into positive territory here. But as we get the closing bells right now, we're looking at an S&P that's down 2.8% on the day. That's going to bring its big drawdown now down to 11% from that all-time high. So back down into correction territory. Only 15 stocks in the S&P 500 managed to finish in the green on the day. That means roughly 97% of that index is in the red on this day. We haven't seen that type of broad-based sell-off going back to late November. The NASDAQ down 2.5%, down about 335 points. The Dow Jones Industrial Average going to finish the day down by almost 1,000 points, 979 to be exact, 2.8%. And Carol, the Russell 2000 down about 51 points or 2.6%.
Yeah, feeling remain like there's nowhere to hide. But if you're wondering where investors were hiding this week overall, looking at those major industry groups in the S&P 500 for the week overall, real estate actually showing a gain of about 1.25%.
Yeah.
So that's where we saw some.
I can't wait to see your gainer board in a couple seconds.
It was not easy, but I've got some good ones. All right, Taylor,
Hopefully
take it away.
Higher, Carol.
Well, Carol, unfortunately, I do not have any gainers to help you out here on a sector level for our radio audience. We dive down sort of 2 sector levels to get some broad breadth and scope here for the markets. Even the sectors that are, quote, the best performing are still deeply in the red, but it does have that defensive tilt to it. It's household products, it's utilities, it's food and beverage. Looking at you, Kimberly-Clark, for example, you're only off, though, about 0.3% to about 2%. Everything else, though, that is some of the worst performers are off 3, 4, 5% even. And those are all the risk on sentiments that are in the red. It's materials, it's telecom, it's hardware equipment, it's media. Really, Carol, not having a good day today.
Yeah, not at all. But hey, you know what's a gainer? Twitter. It's actually up another 4% in today's session. Not one of my gainers, but I did want to mention it. SVB Financial Group. Check this one out. Was up 15% at its high. Even at the close, still up about 7.5%. Surging after a first quarter EPS beat. Also net interest margin topping analyst expectations. It had been the worst performing stock in the KBW Bank Index year to date through yesterday's close, but a bit of a different story certainly in today's trade. Kimberly-Clark, you know the story. We've been talking about it. A beat. They've been able to raise prices. That stock was up more than 8% in today's trade. And airlines continue to outperform. That's been one of the big themes certainly this week. And UAL up another 1.2%. Romaine, I'm guessing you saw this. Did you see J.P. Morgan doing a double upgrade on that stock, moving it to what, overweight from underweight?
Yeah, and I just want to add a fourth to your board. We were talking about this on Bloomberg Television. Bed Bath and Beyond, those shares had been halted. This on the back of that news that Dow Jones is reporting that they had attracted some interest for that Bye Baby unit. Those shares did resume trading, and they did end the day higher by about 7%.
Yeah, it's up about 20% so far this year.
Well, no difficulty in finding decliners on this Friday afternoon, starting with HCA Healthcare, wiping out nearly $17 billion in market value today, finishing the day down by more than 21%. This after the hospital operator cut its forecast for the year. Verizon shares also down by 5.6% today. Verizon dropping the most in 2 years after cutting full-year sales forecast. The company facing not just competition, that's from AT&T and T-Mobile, but also getting hit by consumers paying more for things. The company's CFO, Matt Ellis, telling Bloomberg News that the overall rate of inflation wasn't baked into their planning assumptions. So people paying more for gas and other goods not baked in.
Wait, he said that wasn't baked in?
Yeah, their initial forecasts. Yeah, he didn't think that inflation would be at a 40-year high when they were doing this late last year.
Okay.
So,
I could introduce him to some economists.
Oh, okay. Hey, let's get to Gap. Finished the day down by 18%. Gap shares tumbling after slashing its sales outlook for the first quarter, announcing that Old Navy CEO Nancy Green is leaving this week. She came from Athleta, and she's leaving the firm. So not a good sign there. Also causing shares of other retailers to move lower, too.
I want to take a look at what else is moving lower, Tim, and that is price lower, yield higher. And it's a Friday, so I wanted to take a look at some of the weekly moves that we've seen in the yield space. And it is all about the front end of the yield curve. And I think that really tells the story when you're only up about 7 to 5 to 3 basis points out on the long end, but then 24 basis points higher on the 2-year yield. And Romaine, I think that that really tells the story about all the Federal Reserve commentary that we've gotten out, and really curious now about 50 after 50 after 50.
Yeah, definitely. You see that aggressive repricing right now, and maybe we heard from you mentioned Loretta Mester speaking on CNBC. I guess trying to tamp down some of the wilder speculation about a 70 basis point hike, but nevertheless, the market.
And she's a hawk, right?
Yeah,
she's
and
more hawkish.
Yeah, but the market's been rattled. I mean, let's face it. I mean, Jay Powell seemed pretty definitive in his commentary yesterday at that IMF panel that he was on about the idea of 50 basis points being on the table. You continue to hear from Bullard. All the members. I mean, is there any member of right now of this Fed who hasn't sounded a hawkish tone over the last few weeks?
And we just talked to an investor who's talked to us about how spooked he was about the idea of 3 50 basis point hikes. That was Chris Ailman over at CalSTRS. And it's going to create an overhang for some time. But the question then becomes, what is the low for the S&P?
Yeah, Carol, certainly a lot to digest. I think Romaine had really smartly pointed out that tomorrow kicks off the quiet period as we think about a Federal Reserve. So we might get some calmness, at least for now. But the equity markets and the, I guess, the swap markets, you could call it here on the front end, are certainly telling you a different picture here about front running and this need to increase hikes maybe faster than other market participants had expected.
Let's not forget, too, this is like, I mean, we had definitely had some earnings earlier today, but this was not something that we're breaking a bunch of earnings here at the close that help kind of shape the tone. But I do wonder, the earnings next week, we get some big ones, Tim. You and I were talking about it a little bit in the break. I mean, I do wonder how they can maybe help calm investors down, especially if we get some positive reports.
Yeah, and also do we see what we saw from companies this week baked into the earnings next week? Like, did Snap results help us understand what's going to happen to Meta platforms, for example? We get PayPal next week, we get Pinterest, we get Apple, of course, Amazon, Twitter, we get Intel. We also get more financials, Credit Suisse, Deutsche Bank, Lloyds, Barclays, Standard Charter, and more, Romaine.
Yeah, and I mean, General Motors, a few others. I mean, so it's not just tech. You kind of you're going to get a nice read, I think, across the economy, both in terms of consumer spending, tech spending, business spending. Don't forget with things like Whirlpool. So we'll get kind of a sort of a side read on the housing market. A lot that's really, I think, going to give investors some clarity, or maybe it just causes more confusion.
I also do wonder, I feel like there's such a negative news flow right now. I was looking at some of the stories about recession risk is growing among the regional banks. You have the outflows from B of A. I mean, it just is
the
kind
media,
of rough.
We're so
these are big. These are financial. But you do wonder, and we get these swings where it feels like it gets overdone, and then all of a sudden investors come in and then they bounce back, and then it's overdone to the
There's
upside.
enough to keep your blood boiling, guys. If you want to stay around through next Friday through the close, you have Twitter over there reporting earnings, and there's a lot of expectation of updates there on all the deal-making conversations going on.
I just want to bring up one other quick thing here, too, because I mean, when we kind of talk about the broader picture, we kind of forgotten about the role that commodities has played in this, and the real effect, the negative effect that it's been having on a lot of the developing market countries. There's been some great reporting on the Bloomberg Terminal this week, just about all the emerging market pain that's been going on out there because of this, and now the concerns about is there a spillover into the developed markets as a result.
Dollar strength certainly does not help that. I'll leave you off with this quote that we had from Steve Sosnick, of course, is that if earnings are the 9-inning game, the bank earnings that we were all cheering was really just the preamble, right? Or
the national anthem.
The national anthem, where it sounds all good and well.
You're
But
getting to
does
the
Bank
quote.
of America's trading revenue tell us anything about the economy and the earnings? And he rightfully pointed out respectfully, no, it does not.
That's exactly what I said to you
Stumped
this
you.
morning, Romaine.
Wow.
Wasn't it?
Yeah.
The banks don't tell the whole story.
All right, well,
They don't, but we do get a good read on the consumer and a lot of signs, and I'll end with some optimism, pointing to the consumer is still strong and willing to spend.
and a certain, I mean, we're running out of time, but I do wonder whether some of that data is a little distorted. It's distorted more towards, I guess, a wealthier consumer.
Or
and
American
wonder-
Express, certainly.
And that's what I sort of wonder, that like we know wealthy people are still able to spend, but what about the lower end of the spectrum? That's right. I mean, Carol's going to swipe her platinum, her black card a million times this weekend as she goes out in her yacht to wherever she goes. It's going to be warm this weekend, I think.
It's going to be warm. Yeah, exactly. I'm going to go back to Loretta Mester. I know we have to run, but that recalibration, let's not forget, we're finally, it feels like, coming out of the pandemic. It's not pure, and depending on where you are in the world, that's not necessarily the case. But there's problems still that need to be worked out, and I do feel like our data points are still not clear and clean. And until we get through that, it's really hard to figure out what comes next. And I think it's hard for the Fed to do policy.
Yeah, agreed.
We got to go. All right.
All right. Happy
I'm gonna-
Earth Day, guys.
I'm going off to use the black card.
All right.
All right, got to run. We'll see you. That's going to do it for our cross-platform coverage Beyond the Bell, radio, TV, and YouTube. Have a good weekend, and we'll see you again on Monday.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Let's get to Washington, D.C. with an update from Nancy Lyons. Hey, Nance.
Thanks, Tim. The United Nations says Secretary General Antonio Guterres plans to meet Russian President Vladimir Putin next week to make an urgent face-to-face plea for peace in Ukraine.